This for December 5th, 2019. Good to see everybody. Hope everybody had a good holiday if you celebrated it in the US. And if you didn't, hope you had a good break. Now, did I start? Yes, I did start the recording. Okay, so tonight's agenda, sort of our basic agenda there. Excuse me, I'm coming on the backside of a cold, so I'm going to be coughing a lot tonight. I apologize for that. We're going to take a look at the British pound, our deep practice, and then the current markets. So let's bring the British pound into play here. So our spring, just to catch everybody up who might be new, we've been working off of this monthly spring here. Let me get rid of this. This monthly spring came down and hit the January 2017 low here, penetrated it just a bit. And that was at 1.2001, and this is the monthly chart. We're rallying up. So our first target up here is about 135 or a little under that. And we're making good progress towards that. Don't see any reason why we wouldn't hit that at this point. Excuse me, the weekly ran up, had a sort of flag pattern, which we don't really use, but it's a common in technical analysis where you have a straight up pole here. I'll draw it in for you. Almost a straight up pole, flag pole, and then the flag unfurls here like that. So that's a flag. And that is generally a bullish pattern unless it's happening at the top of a run. And you can see that the daily has had quite an acceleration up in here, as it did earlier. You can see this is the daily flag pattern, if you will. And then we accelerated up the last couple of days this week. So we're doing well with this. I would say that look at the notes that I made for this. Oh yeah. So I'm guessing that we're starting to see a little shortening of the thrust on the daily here, right? So that general and a little bit less volume coming in. So we should start to round over. We might make it up to 132, maybe 1.32 and a quarter. That would be what I would see to be the top in here. We may not even make it that far, but over the course of the next few days to week, early next week, I would expect this to roll over a little bit. And we might come down as far as retesting the breakout here at 1302. 3020, 1.3020 would be would be support in here. And I would anticipate that support to hold. The resistance is not serious or significant resistance because we've just had a nice breakout. In fact, we may go straight up. I don't think so. I think we're going to see a little higher next week, early next week, and then pull back maybe to test in here and then go on up to hit 135 or so. And that's how I see it at the moment. Any comments or questions on the pound? It's a nice little current, it was in the doldrums there with Brexit and then Brexit failing to Brexit and all of the elections over in Britain. And despite all of that, it's still a bullish market. So stick with the technicals, not your opinions, which sometimes is even hard for all of us to do, including me. Here's the liftoff from the spring, comes back, that monthly spring comes back down on a weekly basis and tests it. successful test and pushes on up. Okay then, well, excuse me. So let's see, that's the cable. All right, so let's get into deep practice. Here is our chart for the daily chart for the deep practice. Take a look at this and see what you can see here. What do you anticipate tomorrow? Do we anticipate that the market will try to rally? And where would you look for opportunities on that rally, if it were to rally? Or do you anticipate this market to be weak and we're looking for tomorrow to be down? And if so, what are the levels that you would look to try to short sell that market? So take a few moments. You don't need to worry too much about all of this area in here. We're mainly concerned with this. Obviously, we're in some sort of an uptrend and we've had a pullback. So is this now going to continue to the downside? Or do we see this stabilizing and maybe try to rally to the upside? And the answer says bullish volume, so it might go up. All right. Brian W. says that price looks like it's testing the vertical acceleration on the left. So that's a good observation. We don't have a lot behind here, but we see that the market shot up pretty quickly and then kind of went up on a 45-degree angle or so after that, but it went straight up here. And when a market does that, often we'll see more volume with that. So it's unclear what this was or what was over here. Maybe it was just something like this that the market took off on, or maybe it was something that came down and then we don't know. So we can't really go back to that. We can't speculate about that. But we do see the market accelerating here, and markets frequently come back to test that vertical acceleration area. And so that's a good observation, Brian. Brian says he's bullish. Buying has entered and has a potential, and we also have a potential climax to the downside here. High volume down in here or in here. So Dwayne says, looks more bullish than bearish to me. The last 4 down bars all show buying coming in as they close. Yeah, notice that. Let me erase from earlier. So notice that we come down the last 4 bars here. 1, 2, 3, 4. So the last 4 bars, we come down and rally. We come down and we get a little lifting off of the day. We come down and the afternoon looked like it was up, and we come down and again the afternoon looks like it was up. So that is indeed bullish behavior. When we're in an uptrend, and it's a good solid uptrend, one of the great plays is to look for morning weakness, look for the morning flush, and when it stabilizes, to try to buy that flush and anticipate that the rest of the morning into the afternoon will be bullish and be up. That's a classic play on a classic intraday play in a good solid uptrend. We don't have a good solid uptrend here, but the idea is basically the same, that if we're in a larger uptrend here and we're coming down, then we often will see this occur, buying coming in. As the market is making its way down, larger players are starting to gather an inventory by doing that. So good observation there, Dwayne. Louis says we have the largest down wave on increased volume, indicating supply in control. However, there seems to be a selling climax. I'd look for lows to be made first. If there's no effort, then I'd go long. In other words, if there's no effort to go to the downside, if we don't see a lot of supply coming in, then we would look to go to the long side. Nance says that he would wait for it to rally up and then come back and retest. What would it be retesting? Is the question there. Ted says volume has come in to the downside. Yep. With wide ranges, but closes are off the lows, and the last bar closes in the top quarter of the price range and above the last two lows on high volume, indicating buying has come in. Yeah, look at this. Here's a low, here's our low here, and here's our low here, and this thing comes all the way down and rallies up and closes above that, and closes in the top quarter of the range, the entire bar. So yeah, that's bullish. So Ted says he's anticipating a move to the upside after a move down to test around the 3-day low or the midpoint of the last bar. So he's saying that test the midpoint of the 3-day low. I'm not sure. Oh, okay. So you're saying that, yeah, halfway down here might be about the low of that bar. Well, if the market rallies first, look for a short around yesterday's high and a test of the 3-day low level. So that's good. Nan says retest. He meant retest the huge volume on the last bar. Okay, good, good. All right, so yeah, let's take a look. Let me look at it a little bit different than maybe you all have. Let's take a good hard look here at the price action. Just the last couple of bars here, you can see that we have been rallying up pretty well. We break into new high ground here and look at the low volume. Immediately and the closes kind of cluster here. So in other words, the buyers pushed it up but couldn't sustain it, and it just sort of fell, looks like by its own weight, not that sellers came in. There's just no demand on bar A. Bar B, excuse me, has more volume. And in fact, if we look, if I can do this without, yeah, look at that. So we're getting pretty good volume in here, more so than we see on most moves up. But look at what happens at B. We see that the bar goes up just a little bit above our no demand of A, and then closes back underneath the high of A. And most of the day spent underneath yesterday's close anyway. Okay, although it did rally in the afternoon. So we would expect some follow through the next day, and look at what happens. We get, again, sustained volume. This time the market comes down. We have clear shortening of the thrust. We can't sustain the high, yesterday's high or the 2-day high even, and we come down, and so that's selling. That's bearish right there, right? Come down the next day, we make a new low, lighter volume, we rally up on light volume, then we come down. And as a couple of members said, we come down on big volume, on increased volume, but somebody's buying in there. And we might be thinking, okay, that could, and I would have been thinking that's going to continue to rally the next day. But look at what happens. We get even more volume. We can't even get off of, we can't even go up to yesterday's high from the open, or from the close, basically. We drop pretty hard and on big volume, and some buying does come in, again, trying to hold that that little support. But most of the day was down. Next day, F, same kind of thing. Kind of try to go up, no volume there. We try to go down, close in the middle. And then we drop hard after that on the last day here, yesterday. But again, we see buying coming in. So there's clear buying coming in. I would want to be aware of yesterday's high, which is at 28.91, in case we do continue on up. This level here, I think, is a little bit higher than that. I think it's at 94 or 95, but just generally it would come back and test yesterday's high. If it rallied up, we'd expect that test. That would be a buy point if that test is a successful one, meaning narrow spread, lighter volume, and we start to see some buying coming in. We could go long there looking for an opportunity maybe to come back up into this range in here, okay? Now, but we have a lot of supply there on yesterday's bars. So if we just continue to go up from here, we're going to run into resistance pretty quickly because this has never been tested. This high volume hasn't been tested. So we also need to be aware that the 3-day low, as I think Dwayne pointed out, and yesterday's low, 3-day low at 28.68 and a quarter, and yesterday's low at 28.42. Sorry, there's a shadow in there. I didn't realize I didn't get that, take that out. So any kind of a move down into here that kind of holds, or even all the way down into here, or even below that holds and starts coming back up, would be an opportunity to buy. That would be lows being made first. We don't know exactly where they're going to be made first. Is it going to be around this 28.68 or a little bit lower than that? Or is it going to be all the way down to yesterday's low, or is it going to go underneath yesterday's low? But this is the kind of this would be a Taylor buy day where we've had several days down, but buying is coming in. Evidence of buying is coming in. So we want to look for lows made first, which would have been a Douglas Taylor kind of a play. Lows being made first when there's buying in the background is a stellar setup. But the volume should be lower, right? For what? Coming down, potentially lower, yeah, we'd want to see it lower. But this is buying volume coming in. Yeah, we'd want to see lows being made first on lesser volume if that plays out. Okay, any comments or questions about that? Let's take a look at the 4-hour chart then. We can come back to the daily if we need to, but let's take a look at the 4-hour chart, 240 minutes. And let's focus on this little bit in here. We don't need to worry about up in here because we're concerned about, are we seeing bullishness coming into the market? We can use the daily as a starting point, but it always helps to go. You can use the 4-hour chart, the 240-minute chart. You can use the 3-hour chart, which would be 380-minute. That's okay, gives you a little bit finer detail. You can even use the hourly, but I like to aggregate stuff up on the 4-hour. 4-hour is a very useful chart, I have found. If you study it, you'll start to see some things in there like, I'll just point one thing out and encourage you to study the 2-hour chart. Notice that, I don't know, we get when we're in a trend like this, we get down day, sideways. Here we go up, and then we come down, sideways. We come down, sideways, right? Notice this pattern here. We don't get a lot of sideways days in a row. Here we go. We start off sideways, we go up. Sideways, start sideways, but it's up. And I'm really focused mostly on the well, I'll let you see that. But I would encourage you to take some time to really study how the 240-minute chart works. Ask to, no, I'm working, I can't let you out. No, you have to go upstairs to mommy. Go upstairs to mommy. Asked as my dog. He's looking at me like, what's wrong with you? You can't let me out? Don't be so lazy. Get out of your chair and let me out. All right, so take a moment or two. I'll let the dog out. Take a moment or two and see what you can see in this 240-minute chart. Okay, okay. Does this, most of us are bullish, right? So does the 240 add to the bullishness that we have, or does it detract from it? That's the key thing on the 240-minute. Not so much that we're looking for, specific, well, let's see what you come up with here. Ted says the ease of movement is to the downside, and when it rallies, it forms congestion before continuing down. No upside ease of movement yet. Right, that's true. In other words, every time we rally up, we get into congestion. Every time we rally up, we hit congestion. And that's characteristic of a downtrend, right? Last bar, says Nance, is quite weak. It didn't close higher on relatively low volume, indicating it might go down to retest. That's possible. You've got lighter volume in here at the end of the day, and it was unable to continue to rally up. It's hitting this resistance in here. Going back to the 3-day low, I think. Yeah, it's hitting that area in there. And it has not broken the supply channel. Yeah, that's right. Kim says that. Good point. Based on what you said about looking at the chart, it looks like there should be some sideways movement now during the off hours. Yeah, probably, likely that you would see it. Some sideways stuff in the overnight. Just taking a look at this, you can construct a trend channel, and it hasn't broken the trend channel yet, but we clearly see every time we come down to the bottom of this trend channel, which got set up at this point, you can see that it's there's 3 touch points here on this. So it is a good trend channel, meaning that if we come back down into this area, we're going to be oversold pretty quickly. The other thing I wanted to point out here is a subtlety. And I look for this, and I see it sometimes on, I remember I was doing a public thing in Chicago several years ago now with Trade Guider, and they wanted to trade live. And I'd gotten in the night before late, and I come in and really hadn't looked at the charts all that much, and I was due to speak, and they wanted me to do some live trading. And I had a little presentation to make, but what I saw on the charts, and I saw this on the tick chart, which was the only thing I had on my computer because I was working off of a laptop, and I didn't have a lot of charts. Actually, didn't have a lot of power in that machine either to put up a lot of charts. But I saw that there was very heavy supply coming in. A couple, on the last leg down here, and you can see that on bar A, right? And then bar B, we get the bullishness coming in, bullish bar, right? And it rallies up. Okay, so now a day later, or 2 days later, actually, look at what we see here. On bar A, we see very light volume coming down compared to where we were the last time we were approaching the supply line, right? And this is what I saw on the when I was doing that Chicago thing. We saw a lot of supply on the tick chart. I was using a bigger time frame than 3,000. I was probably using 9,000 or something. Anyway, saw the supply there, and then literally no supply coming down on the next wave relative to what we had seen before. And that said, oh, we're going to go long in here, and had a very good trade for that day. But it's the same sort of thing. You know, don't discount the overnight volume, and don't discount when we come into key levels, key supply or support levels, as we are in here. Now, this wasn't in the overnight, I don't think. There's generally 3 bars, 2.5 bars. This would be from 6 to 10. This would be from 10 to 2, and then this would be from 2 to 4. Actually, 2 to 4, 2 to 5, I think, and then it ends. And there's always 3 U.S. session bars in the 240 minute. But the overnight often gives you a good clue also what's going on. So here, you know, coming in to this day, we can see that the 240 is coming down, and now we're starting to see selling coming in. Yeah, we're at this point here, but we've broken it and so on and so forth. So you'd be looking for, the 240 is actually very helpful in this regard, saying, okay, let's get a short in here, because we're coming back up into that shelf. Anyway, I'm going off on a tangent. I apologize for that, but I really do like the 240-minute chart. It has a lot going for it, I think, in a lot of different ways. In what respect, says Scott, about overnight volume, are you saying low volume at the overnight should be looked at as low volume? When you are in the instance of that you're in a downtrend like we are here, and we're coming in to a supply line or a key support level, and in the prior days that we had been coming down, the overnight volume was comparatively heavy compared to other overnights. So we're seeing good swift moves down, right? Then we come into the US session, and the volume isn't, the overnight volume, and especially around the open, what I call the pre-market, from about 7:30 a.m. Eastern time to 9:30, those 2 hours, hour and a half before the market opens. I would call that pre-market. And if that pre-market volume is lower relative to what we had seen coming down, and in prior days coming down, and we're at that supply line or a support point, then you start looking for a buy opportunity, because the market is very likely to pop up as it did here on that day. Is that clear, Scott? Yeah, no worries. Glad that helped. So take a look at that. I really like the 200. I feel like I could write a book on the 200, well, at least a chapter of a book on the 240-minute chart. There's a lot that is going on in that chart. It's very useful for us. So from this, it would support the idea of buying being bullish. Looks like supply is diminishing here. Buying is coming in. We've got a couple of good, clear indications of buying going on, and even as far back as in here. I think, as Ted said, every time we've come down, there's been at least a little bit of buying. So, good comments there. Just as a quick heads up, we're on our normal schedule for next week. The 12th, we'll meet at our normal time. All right. Take the slideshow off, and let's see if we can get to deep practice now. somehow my computer rebooted or redid something or another, and now my screen, I've got to bring stuff in. Yeah, okay, here we go. Oops. All right, so here's our daily chart. And I didn't put this in, but we can put this in here. So we're already trading down, right? We're already coming down. And notice that when here, this is the hourly. The daily, we had gone above yesterday's high, and we're trading down. Okay, so the hourly, this is the volume we had coming down into here. I clipped it, right? And look at what happens as we're coming down into here. So watch the volume as we come down. So now this is telling you that we're looking for an opportunity, or would be looking for an opportunity potentially to buy at some point. Not necessarily on this bar, because this is supply coming in. So this doesn't look like a opportunity here, but it's much lower than what we've seen earlier. If I bring this down, you'll see it very clearly, I'm sure. See what I mean? So, but that's not, let's just leave it clipped for now. And I have yesterday's high and yesterday's low in there. I don't think I put the 3-day high or low, and I also have the overnight high in. As that market went up a little bit, and sorry, I was just letting the dog in. The market went up a little bit higher than yesterday's high in the overnight. And let's take a look at the 5-minute chart. So you can see it had come down after getting up above yesterday's high. There was some volatility there, heavy volume. Tested it, comes down, rally up, kind of holding in here, tried to, I don't know if that was an up thrust. Yeah, it looks like it was. So if you were up early, there was a nice trade for you. And now we're coming down. Actually, I'd pull this down here. Something like this, I think. But we're coming back down into where we saw some buying coming in earlier. So let's see if I can get the real estate working well here. We don't really need too much of the daily. There we go. Okay. All right. What ES contract is that? It's just a continuation contract, just a standard continuation, ampersand ES. Whatever TradeStation does with its continuation charts is what's is this. So this is at 8 a.m. in the morning, an hour and a half before the US Open. This is the pre-market. This is the time I usually show up to my trading desk, sometimes a little bit earlier, but anywhere between 7 and 8 o'clock in the morning is a good time to come in. There, that bar just finished. Dwayne says we could go long here with a tight stop. Okay. I think you meant in here. Let's just take a look at this a second. As we come down, volume is pretty good, pretty decent. I see, though, shortening of the thrust in here, suggesting that buying is coming in, because if this was selling, you know, these bars would look more like this and this coming down, right? But here we're starting to see the shortening of the thrust. Then we get some buying coming in. Here's a test here on this volume. And it's another test coming down. So anywhere in here is okay to get long. Your stop has to be under here somewheres. And there's the reason why. And we probably just got stopped out because that was probably that would have taken us out, right? Yep. So that was a loss. And notice the volume coming in. So the trade idea was right, but the stop was tight, or it was a little early getting in. They decided to shake it out beforehand. Don't you hate it when you were right? You go in, you had called the direction correct. You go in, you were in the market in the right spot, and you get stopped out, and the market goes in your direction anyway. So now let's just clean up our hourly chart here. We should put the spring line on. So now, looking at this, whether we're long or not, what I notice here is we had some selling coming in here, right, on these bars. This stuff right here, though, is all selling. So is it going up just to test that, or is it going to drive on through? Well, we'll find out quick enough. And Dwayne says, I'm working on this very problem of being in too early. Yeah, it's, you know, there was nothing wrong with that trade. Absolutely nothing. It got you got shaken out. This is sort of the story between weak and strong players. We're all weak players in this because we don't have the capital to be able to withstand, you know, a 5 or a 7 point downdraft against our position. That's a lot of, you know, especially if you got more than a couple of contracts on, that suddenly begets that, you know, starts to get to be large in terms of money being put out there. And it's always a good idea to limit your risk to, I like to keep it at 2% or less. Ideally, it's around 1.5% of the account size. And you can, you know, if you've got a very large account, you can go crazy with that. I wouldn't encourage that either, but that's why we have stops for stuff like this. This was an accident, if you will. It wasn't a a bad trade. It had all the stuff going for it for at least a small little trade up there, right? And so now what are you noticing here? We should have gotten back in after the shakeout. Yeah, it would have been nice, right? Buyers coming in. Reports maybe best to wait until after the report is out. Yeah, reports do come in at 8:30, and that's probably what that was. And you can stand aside if you want to do that while reports do come out. That check on any of the Econoday calendars. Barron's has one, and you can Google it, and you'll get all the reports that are coming out every day for the month. And that's a good thing to know, a good thing to have. So what do you think about this here? You think that's a crazy move there to short this at this point? Good volume coming in, but no real strong ease of movement up after the spring. Yeah. Look at the volume on the oh, it's even more than, sorry, I forgot to unclip this. So we got a lot of volume coming in here. We're making some progress, but boy, don't you think you'd see a lot bigger progress than that on that bar? I don't know. If I look at this and I put on a trend channel here, it's not the greatest trend channel, but we'll use it. I'm at the top of it, right? I'm also looking at, I'm right here where big supply came in before. So this is an area I'd be interested in shorting because from a technical position, I'm overbought. And from a structural position, I'm in an area where prior supply had shown itself. And if I go back into the hourly, remember I said pay attention to this, I got supply all over the place here, right? And I'm in that area, right in the middle of it, right there. So I'm interested now. And I see the heavy volume coming up, big spikes up in here on these last two bars, and there's no movement. I have almost clustering of closes here, right? I have shortening of the thrust. I have effort to go up and no results. So what else do I need here to take a short? That's what I want to know. What else do we want? Right? Yeah, there's nothing else that we need. Seems like a semi-random point. Yeah, well, do you still think it's semi-random after I say that, all that stuff? Or was that Dwayne who said that? No, it's Scott. Okay, get it. Disregard. Oh, he says disregard. Okay, got it. Okay, so for all those reasons, it's worth a shot. It may only go down to here, right? Here's your support point, but that's like 4 or 5 points away, so that's not a bad spot. And you've got to watch that because you've got two trend lines coming together here. You've got a horizontal line coming across, and actually this is maybe even an access line because it's got support here, resistance, resistance. Will it be now support? It very well could be. But we have enough headroom, so to speak, to find that out, right? And it's worth a shot. Just because we lost a few points down here doesn't mean that we should, fold up our marbles and go home. We still want, our job is to locate spots where trades are likely to set up and then see if they can set up like this and then take them if they do. It's not really to trade, okay? Okay, so we're getting, I should put a line there. So we're getting a little bounce off of here. Now, we're not finished with this bar. There's still a minute to go here, but that immediately tells me, if we go back, right, we bump up a little, we start to pop up, and then the very next is down. That just tells me that there's weakness in here. And there, that bar is completed. And now look at our hourly chart, right? We're coming off the top of that. Okay, so this is something we want to hold now because we've broken the most important support, which is the horizontal, right? May come back up and test in here a little bit on the next bar. I don't know, but we're going to hold this. It shouldn't come up above here. So if your stop was up in here, you could tighten it a little bit if you wanted to. I don't think I'd bother doing that. But they try to bring it up, and bang, they slam it down. So the flow to the upside, so to speak, was pretty good along here. We had no downflow, right? The market was unable to go down. Now it's going down pretty easily. And any time it's tried to go up on these last two bars, it gets slammed back down. So this should be, what's our target now? Our target's going to be down into here, down in these lows, right? And if we break this, then we're going to go for yesterday's low. So we're positioned nicely here. Okay, some comments here. Only thing missing for me is structure to lean against. Yeah, that's true. You are kind of flying in the breeze here a little bit. You're not leaning against, you don't have a real danger point. That is true. You're relying on a diagonal trend line, which is not the greatest. No question about it. You know my opinion about them. Where is the stop on the short? It would be initially, you would keep it pretty tight. Well, let me see. Here, initially, yeah, you're not going to be up above much above here, because this is coming in. It looks like around maybe 70.5 or 71. You don't want 6 or 8 points of stop. You can't do that. This is a fairly volatile day already in the morning, so that tells you that the market is pretty active and could be. Volatility is really our friend. Excuse me. We want volatility. There's no upthrust here. There was an upthrust here on the hourly back here, but there's no upthrust. And there was an upthrust here, but there's no upthrust here. That's not an upthrust. Upthrusts have to upthrust something. And they're upthrusting the last swing high. There's a swing. Do this so it's clear for you. We have a swing high, a swing low. We come back up to the swing high. We penetrate it, but can't hold it and come back through. This is an upthrust. Okay, that's the only upthrust we have in this method. I know VSA has different kinds of upthrust, but we're not teaching VSA specifically here. And why, that's a very telling, we can see it in spades here because we're doing it 1 minute at a clip. It's harder to see during the course of the day, when the day is actually happening. But when you see that, when the bars try to reach up and then they fail and come down, it just suggests pretty strong weakness there. Yeah, so that's the 10-15 bar. So now, what's your impression of this support here? Are we likely to hold it, or are we likely to keep going lower? And take a look at the daily, the hourly, and the 5 minute, because we're in a nice trade. We got in here, I don't know, around, let's call it 70. And now we're down at 55. We've got 15 points in this trade already. So you understand, taking a 3, 4, even a 5-point loss here, we've already made it up several times. Don't let this kind of thing affect your ability to see what the market's doing and to enter on good trade setups. That's important. Because if this gets you, if this loss tells you no, not to do this, then, not only do you have the loss, you don't have this. You're twice behind the 8 ball, so to speak. Okay. Dwayne says it should continue down. Is there a way to set TradeStation to only feed your bars at 1 minute intervals? No, we have yelled at TradeStation till we're blue in the face for more than a decade. I've written them several times. You can go on their forum and request stuff, and you request bar replay. That's what it is. And it doesn't do it. They just don't do it. I don't know what to tell you. And that's why I'm using multi-charts. This is the multi-chart software, right? And it's very good software. I tend to like TradeStation a little bit better in terms of actual trading and stuff, but multi-charts is a very good trading platform, and it has excellent bar replay because you can coordinate multiple time frames with it. The only thing it won't do in bar replay is take tick charts and put it in with hourly or 15-minute charts or daily charts. I would lower my stop to above the last bar. Yeah, you could bring your stop now. I mean, the ideal stop would be to put it really right above this bar here. That's where you would. Why do I say that? Because it could bounce off and come back. This is resistance in here, right? And it should not come up above the vertical acceleration coming down. It may come back in and test in this area, but it should not come back up above. If it does, then it's probably, especially if it closes above there, then it's going to obviously go up. But yeah, this is not a, okay, so now we're going to try to hold in here, right? What do you think the odds of holding and springing this are, given the current look of this market? What do you think? Looking at the daily, the hourly, and the 5 minute. 0 to non-existent. That's Ted. And that's absolutely right. There's like no possibility. Well, you shouldn't say no possibility, but Very weak market. Yeah, Ted says short this, and he's absolutely right. Bang, right there. Okay. And now you can bring your stops down to this point, to above here. That's fine. On this leg here. This one you probably would keep down in here somewhere. Not quite that low, but a little bit lower. A little bit higher, rather. And we can see on the Weiss wave, now that it's flipped, there's just no volume in there to the upside. So where's this thing going to likely go to, would you say? Yesterday's low. Yeah, that's our target. That's our target. And notice the volume coming down on the daily as we're making our way down there, right? We don't see a lot of huge volume. Same thing on the hourly. Can kind of give a look here from yesterday and see that the volume level was, oh, I don't know, in here somewhere as we make our way down, right? Whoops. So now, here we are. We started off at 2870 up in here, just to give you a sense of what we've got on this, in this trade. And we added at about, let's call it 50, I don't know, 52. And now we're at 38. Well, let's call it 30, let's call it 40, just to make it easy. So we got 12 points on this leg here. And on this leg to 40, and from 70, you got 30. So we have 42 points in this trade. And that at $50 a point per contract, right, is $2,100. Am I right about that? If that's just one contract, US. Yeah, that looks right. Okay. So now, here's the real question. Do you think this is going to go lower? If you do, you hold it. If you think that yesterday's low, maybe we're retesting that, you might want to take the trade off. What do you think? Not sure, very low volume. Well, I would suggest this is a spot where this is a good place to exit because we're at a, well, let's just see what happens. Take partial off and hold for further move. If it closes back with conviction, then get out. Okay. So what are we seeing here? And there's a spring. Yeah. So we're going to cover our shorts in here and go long on this spring, okay? Yep. Ted says supply is, yeah, Dwayne says he'd be out now, buying's coming in. That would be my play too, would be to get out, but not necessarily go long yet until I saw a little bit more convincing. Ah, there we go. That's the end of that bar. We'll see. Now I'd be interested in this. I think I'd be willing to buy in here. Now, notice that we have a lot. Why do I say that? The reason being is, as Scott, I'll get back to your question. Sorry, I forgot about that. Let's see. I forget who said this, but the supply is diminishing. So we've got, supply overcoming demand clearly in here. But then look at what happens. The supply diminishes in here. We don't see demand coming in per se, but there's no selling at the moment, right? So, and then every time we dip down, I'm noticing the buying coming in, the buying coming in, the buying coming in. Okay, all at this level in here, all right in here. So now there's a couple of ways to do this. If you think the market's about to take off, you go long right here at 41. We've got a lot of room in here. There's 5 or 6 points in between. So I'd like to get down in here, maybe 2 or 3 points a little bit lower, see if I couldn't buy in here. So what I would call feathering in, watching this now carefully. And here's the spot where you want to try to buy, right here, right? Around 37. That's a good spot right in there. Maybe even, oh, there's even lower. You could even go in here. So now you got to be able to do that though. You've got to be able to pull the trigger once you make that decision, right? You can't be saying to yourself, oh, it looks too bearish now. That's not the way to be doing that, to be doing this. A lot of people, I've seen this a lot of times where they say, okay, we want to buy in here, but now they get perfect opportunity to buy at a really cheap price, and they can't take it because it's a down bar. But look at the volume here on that down bar. And again, buying come off the bottom. So here, if you didn't get in there, here's a spot to buy at 35.50. It really doesn't matter where you get in, as long as you get in here. Yeah, Ted says another test in here, you could go long on that too. Absolutely. All these are tests in here. This is all testing, testing, testing to see if there's supply. They're probing for the supply. And notice how it just is getting less and less and less every time they come down to it. So now we want to see this thing close up above, right? So let's say you got in at, what do we say, 35 or 37, okay? So we're already 4 3/4 points, or 4 3/4 points up. We've got to make sure that this thing clears this now. That's important. It's got to close above it. You could buy this. Here's another test right here, right at yesterday's low. We push up, we come back down. You could buy this if you wanted to. But we've had a lot of, we've gone sideways now from about 10:30 to 12 o'clock. So for an hour and a half, we've done nothing really in the market except for consolidate this big down move. Now we're starting to move up. I'd like to see more volume on this. And if we had a little more volume, I would say that this is one of the few times, if we had a little bit more volume, if it really looked, if this had, let's say volume that looks something like this. Oops. Doesn't have to be huge, just a little bit more volume than we see here. If we had that, then I would say that this would be okay. This is one of the few instances where it's okay to buy on the break of the resistance. This is one of the few places that, why do I say that? Because we just tested against yesterday's low. We spent an hour and a half or so down here, couldn't continue underneath that. We rally up, we have resistance. This is the, if we could box this in, this is really this is the area of yesterday's low right in here. Okay, we can kind of see, this is what it was trading, and now suddenly we tested at the high end of it and pushed through it. So it would be okay to buy this. One of the few times you can do this. Hopefully that's clear. All right, so on your initial entry, why did you not choose the bar before the bar you entered upon? This bar here, you mean? You could have. Let's go back here for a second. Let me just see what this. Yeah, you could have. I mean, the volume popped there and it didn't do anything. No quite. You had a down bar, you had a reversal bar, and then effort versus result in here, and some capping of the market. So yeah, if that was your question, you could do that. It's a little more obvious on this bar, right? This is a little, you still have this behind you. So the question that I'd have in my mind is, okay, we tried to go down, we failed, we moved up, we're still holding in here. It is clustering of closes, we are at the top, but is this going to go up higher? So I might have put, say, a sell stop under here, or just kind of watched it. And if the market if the bar started doing this, it gets short even on this bar here. In other words, if that came in a bar earlier, right? You could do, in other words, if this bar came in on this bar. So in other words, we got short here on this, and then this did this. Even if you didn't get short, you could get short on that. That's okay too. Maybe I'm confusing it, but hopefully, okay, you got it. Okay, good. So yeah, you could do that. This just gives you a little more confidence in it because there's more effort versus result. There's bigger clustering of closes, and there's shortening of the thrust. More aggressive, you could do this one. Ted would do that one, right? So now we're coming into here. Let's take a look at this. Let's see what this looks like. What do you think about this? Still bullish. Yeah, it is. Small reaction expected. Yeah. This is kind of a test in here, right? This is like a Sebastian Mamby single. It's not a great test because it did go higher than the prior bar. What we look for in a test is a down bar. In other words, it closes below the close of the prior bar. We prefer to see an inside bar, not one that goes above the high, because it shows that there was some bullishness there. I'm sorry. We prefer it not go above the high because it suggests that sellers could have come in and pushed it, or did come in and push it down. But on low volume like this, at a resistance, right at a resistance point, this is something that Sebastian Mamby discovered several years ago, and it's, in fact, this kind of a test here is similar to that, where you're testing. It's a little bit wide for a test, but you're testing really, is there supply going to come in here? So they push the market down and they look to see if sellers jump all over it, right? Nobody jumped over it. Same thing here. They would push it down a little bit to see if they could entice sellers to come in. And nobody comes in. We see that by the volume. And the Sebastian Mamby test, if you will, Seb's test, occurs at resistance or just prior to resistance. So you might see it coming in, where's my pen here? Maybe we only went up, say this high here, and then we had a test, a good solid test, a nice inside down bar, low volume as a test, and then we would anticipate the next bar to just drive right through that, or come up to it, and maybe take a couple of bars to drive through. But a test at the resistance or just before it, a bar or two before it, is a very subtle little signal, but we see it a lot, and it's a very good little signal. And if you're long and you see that, just hang on, you're okay. It's not supply coming in. And see that? Look at that test. That works beautifully. A little bit of volume comes in, but we got good movement on that, but it looks like we're getting some kind of a pullback here. So let's see, and we're coming into the pocket up here, so into some little bit of resistance. Is that the fifth bar? No. Oh, yeah. Yes, it is. So we're testing in here. We're getting another test. That's what we were looking for here, right? Inside bar, down bar, closes below the prior bar, but it's an inside bar. No supply coming in here. Yeah, Ted says, let's go long. You can go long anywhere in here, on any of these bars. Is fine. So what's our target now? Yeah, the top. Another test here. As this is going up, even you could go long in here. Another kind of test. This is looks like they're trying to absorb in a way here. Every time it dips down, it's a test. 2870, okay. So let's see where we are in the bigger picture of things. On the hourly, we're coming up to this resistance here, and we're coming into where we had supply before. On the daily, we're almost where we closed yesterday, all the way back up. And you can see that, if you remember, the volume was fairly low down here. And now, as we see the day progress, we're seeing the volume build. We can consult the hourly chart. We had a couple of down bars here, but then we had effort versus result right in here, right? Effort to go down, no result. In fact, it closed higher. And then bang, it's pushing on up. So we have, this is pretty bullish in here, right? So at least through this top, and let's take a look at the 5-minute. Right in here. I'll just use this line here. So we're getting into that spot there. And again, you can kind of, don't be greedy. You can kind of look and see what you've got here. If you got in around, I don't know, 40 or lower, now we've got 30 points. We had 42 points here and now 30 points here. Even if you got in here around 60, you're up at 13 points. That's pretty decent. This is a very good day in the market. So what does that tell you? Pop in volume on second to last bar, no volume on the last bar. Let's get out of this trade. Yep. So this is a good spot to exit in here. You still want to short this? What does this look like to you all? Up thrust. Okay. Yes, technically it up thrusted this. Yep. And so you can short that, certainly. How does this look to you, though, in terms of the, yeah, Ted says it's an up thrust, but it's hugging resistance. It looks like it's kind of absorbing, says Scott. Yeah, doesn't it? It comes down and pushes back up. It comes down, tries to push back up. I notice that the supports are lifting. And this is this seems like it's a little bit characteristic of this market in this area here, right? When we're in this supply area here, I see the lows lifting there as well. So I would at least cancel the short. This does not look like it is a good, that this up thrust is going to continue here. You're in a move up. We've got all the good reasons for on the hourly to expect further upside, at least up into this area, because we just broke this, right? And what it looks like to me is we're kind of coming around and just toddling around the 3-day low just to make sure. And it looks to me like there's not a lot of supply there. Yeah, 2880, yeah. So aggressive players, really aggressive players, would take a long position somewhere in here. But I would just be standing aside, sitting on my hands at this moment. Well, that was the wrong choice, right? But that's okay. And look at the hourly now, coming back up above that low. of that high rather. All right, let's get rid of this and get a real line up here, because what they're doing now is they're going to be testing this, right? So we've had the breakout, now we're coming back into test in here. So let's see what happens with this. Some potential supply building here. So no demands, go short. Okay, on this last bar here, right here. Okay. Ted says exit. I think he was exiting as the market started to climb above this bar here. And you don't have to set hard stops in the market if you are confident that you can execute stop losses when you have to. Excuse me. As in that case, you know, you can give it a bar, but boy, you cannot be in that. You can't still be short with this on this bar here. This, not this current bar, but the bar before, because it's closing above. It's closing above because buyers push the price up there, and they're going to continue. Excuse me. They're going to continue to push it up higher still. We always expect follow through when we see a bar close firm like this. Excuse me. All right. Oh, excuse me. Apologize for that. Excuse me. So now we have more demand building. A little pop there in the Weiss wave, so probably a minor climax of sorts. Nothing really significant. Oh, sorry. Another nice test right there. And a buy point. Excuse me. I'm having trouble. Hang on just a second. Oh, I hate colds because of this. Okay, so we have an obvious target up here, yesterday's high, right? We had gone through it, and we came all the way down to yesterday's low. It's almost a no-brainer that that's where we're going to, right? You're seeing some shortening of the thrust here, but most likely that's because of this right here. And the key is we've got to close above that on the next hour. And we'll just watch for the progress to happen on the 5-minute, and there it goes. Another test in here. And there's our exit, right in here, right towards the end of the day. And I'll run this out. And you can see that that's as far as it could get before it finally fell on down. All right. So as a recap, we looked and had kind of a little bit of an ambiguous chart in some ways. There was no clear support to rely on down in here, just yesterday's low. But we saw buying coming in, heavy volume. One of the things to notice too is that in the markets, you will often start to see this sudden, I call it a swelling of volume. You know, the volume's cooking along at about an average level here, and then suddenly it gets large, right? And typically you'll have wide spreads and bars going all over the place and everything else. But what that generally means is that the market's is about to make a turn. The volume is there to stop the down move and to acquire contracts so that an up move can now take place. And that's, I'm talking about longer term now. This would be a longer term play here. You'd want to see this tested still in here. You might look for an opportunity to buy down in here for a position, but it could be a nice, would be a nice trade, at least to the top of the swing up in here. But anyway, we started there and saw that there was not a lot of supply coming in as we came down on the hourly vis-a-vis what we saw the other day coming in here. And then the volume started coming into the upside. We made trades on both sides of the market. Nice trade to the downside here. Even if we didn't get in here, we could get in here. That was kind of a no-brainer, right? And had a nice run here. We had opportunities in here. We talked about the breakout. Opportunities in here. Even as late as up in here for, I don't know, how far did this go? From around let's just call it 81 to, who knows, 95. You still got 10 points, 8 points, 9 points out of this. So never too late, as long as the market is continuing to show you that it is moving. You know, trends go farther than we anticipate. No one would have anticipated when we're way down here that we would go all the way up there. If we did, we'd hold on to it and have a 50-point trade, right? From 28.40 to 28.90. I mean, that's a very volatile day, very nice day of trading. But that's what we look for. That's why we live for these kind of days. If you played this day right, you could have made 80 points. Yeah, no question. Gary, do you prefer trading on 5-minute or for example, 3,000 tick chart? I prefer the 3,000 tick chart. But as I said earlier, in bar replay, ticks don't work with time. Ticks are not, a tick chart is not based on time. And so the software doesn't know how to handle it. It can't really handle it. And it makes a mess of everything. So I use the 5-minute, which is very close to a tick chart. Not quite the same, but you know, fairly close. You can trade off of either one. All right, let's take a quick look at the current markets. Oh, any questions or comments on this before? Are you usually following a tick chart and not a 5-minute? Yeah, I don't have a 5-minute chart. If I have a tick chart on, you don't need a 5-minute chart for sure. When I'm looking, my daily, my screen has a 240 chart on it that I look at in the morning and probably at noontime just to see what, things are doing. The hourly, and I'll often have a 15-minute. That can be very helpful, and a 3,000 tick chart, and the daily off to the side. And that's how I trade. Okay, so let's take a look at current markets. Let me take a look at the S&Ps, quickly adjust the volumes. I wrote a couple of blog posts the last, on Monday and again, or Sunday and again Wednesday. I'm going to try to do that. Take a look at those. You can see that on the monthly, we're going, if I crunch this down a bit, this is back in 2009. This is the trend channel all the way up, and we broke through the top of it here in the mid 2017. And so one way to deal with that is to just take the way to deal with that is just take the parallel of that and put it on the next swing high. And so that's what we do here. And so technically we've got a little more room to go up in here. I don't know, maybe. We'll have to see how all of that plays out. There is a point in figure chart that will take us up to the 3,500 level. That's way up here. I don't think that's going to happen, but who knows if it will or not. I can't predict that. No one can really. The point in figure charts do, but they often predict, big numbers like that. I had somebody write to me when I said there's weakness coming in, I think back in here, and to be aware of a down move, and somebody wrote and said, but Hank Pruden said several years ago that the Dow was going to 10,000, or not the Dow, the NASDAQ was going to 10,000, and it's not there yet. So this can't be right. I said, okay, you could be right. I could be wrong. But what I see here, so there can be some more upside. There certainly can be. I don't see it right away because of the weekly. You have a lot of volume coming in, and so far we're not doing much with it. This is not really constructive, what happened on the daily here. We have two large bars coming down. We're trying to go up, and we're starting to see diminishing volume. So, you can kind of see in here, for example, this high here is almost at the midpoint, right, of this top, the vertical acceleration bar here. So this area, whatever this is, 33, 35 in that area, can be very significant. Watch for that tomorrow. We may see this come up into here, and Fridays we can see a big down move. There's a lot of stuff going on politically, obviously. Today they announced that they're going to draft up a resolution for impeaching the president. That'll be brought up on Monday, and they'll be in recess as of Friday, so they're going to vote on this next week. So I would expect to see this market. We'll see what happens. There's a lot of craziness going on in the American politics, as we've talked about. But technically, this is showing some weakness. So watch that area here. But for our purposes here, let me see. Yeah, I have to say, 3160 to the upside would be the resistance. But watch this 35 area, right? 3160, because if it breaks that, it's going to go up to or it can go up to 3160. So watch that. And then 3070 down here to the downside. If we start moving down and this rolls over and we start coming down and we break 3070 next week, look for it to go down to about 3020. Okay, I'll box these in later, but that would be the, so you expect a little bit of resistance, certainly up here after all of this, but probably going to come in here. This should still serve as support. We may see this go back and forth for a while. If it breaks, then the next level is going to be down in this area here, 3020. That's the idea, okay? The market looks as if it's topping. Boy, it's been looking like it's been topping for a while. Crude oil. Interesting market. Yeah, we rallied up and had this really hard move down and then just kind of have been sideways in this trading range. This is a tough market right now. I was looking at more research. They do a lot of cyclical stuff, and December is a cyclical low. I don't put a lot of faith into that, but I just happened to be looking at it, and they said December is typically the low point for crude, and then it rallies off of there until into the springtime. So looks like it wants to rally out of this, but boy, we're in the middle of a congestion. Really, we're in the middle of congestion, so it's not a spot I'd want to be trading position-wise. Day trading, different story. I think you can certainly day trade this. So I would kind of basing this off of the weekly. I would be looking for this 57 for support would be a test of the vertical acceleration area. Likely not going to get all the way down to there if it's bullish as I think it is, but it could. That would come into this. You can kind of see in here that you've got this here and you got this here. So it's kind of like, oh my goodness, what did I do? So it's like this area in here. So I'm saying around 37 because I don't think it'll get all the way down into that. But this is the general area that if the market comes down here, it should hold in this area. If it breaks through there, then we got problems in this market. And I'm not anticipating that it will. Then to the upside, 61 would be the first target. And then 64 after that. And that's based on the weekly, and I'll show you that in a second. 64. If it can break through that. We've got some ways to go, though. But you can see here on the... Sometimes it's hard to remember how to switch stuff back and forth between the two softwares. So this is about 61 here, and this is about 64 up in here. That's the idea. Okay, so we'd expect some resistance coming in when we hit this point. If we push through that, we'll likely see some resistance up in here. I didn't see this earlier. That's okay. All right, so 61 may be more important than I anticipate. Watch out in here because we do have this kind of line coming down on the monthly, but I don't, we're in a, seasonally it's bullish, so I'd be looking more for the ability to break these highs eventually. And then finally, what's the last thing? What am I in here? Why am I still? Oh, okay. And then finally, the 10-year note. So we've had a really nice bullish run up on the monthly. We've been following this up quite nicely. We were looking for it to get up to 134. I think we're going to pull back a little bit though. That's the sense. Now, that's not a lot of volume either. Well, I'll go with what I was thinking before. I'm not going to change it in the middle here. So for tomorrow only, watch for negativity to come in around yesterday's high. If you're trading this day trading, watch yesterday's high. We may see some negativity come in there. Market comes up, plays around in here, and then comes down. So I would say that oh, come on. This area right in here for tomorrow would be a if we come up there and it's weak, it would be a nice short, potentially, push down. But that's for tomorrow only, okay? Otherwise, for the rest of next week, the resistance would be at 130. In other words, the high is up in here. And I'm looking for us to push down to about 128.15, which is this low down in here. And if that breaks, then down to 127.15. I'm looking for some negativity to come in to try to break down in here. I know we have a spring going on, but after a month of hanging around here, we're not doing anything. So I think that seems to be a little bit long for it. It's possible this still can go up high. So if we start breaking through here, we get, I'm kind of hedging now because I'm not entirely sure about this. We're outside of the trend channel and all of that. So if this starts to break and closes firm and then pushes up, this could break. So watch for that. I could be wrong about this, is what I'm trying to say. I'm less confident in the 10-year note than I am in anything else that I said tonight in terms of the markets. All right, that's what I've got for you tonight. I apologize for taking us over. I didn't realize the time. So next week, we're on normal schedule. I think it's the 12th of December. I'll see you at 8 o'clock, which is next Thursday. Have a great weekend and a good trading week next week. All right, everybody. Thanks a lot. Take care. Bye-bye. Yeah, try to get well, Ted. I can't wait to get rid of this cough. That's for sure. All right. Take care, everybody. Bye-bye.